Well, as we've been mentioning, investors can't escape the long shadow of Europe as the region struggles to tackle its debt crisis. So many headlines coming out of that region. With us now to talk about all of this and also about the U.S. economy is Bloomberg Best John Herrmann. He's the global markets senior fixed income strategist for State Street. John, always great to have you back on the program and in the loop. Okay, let's first talk about what is going on in Europe. Now, we've got 4 days. It looks like we're going to see a 4-day rally here in the equity markets. Are we getting ahead of ourselves in what we're expecting out of Europe?
Europe has a very large, substantial debt challenge. The U.S. also has a very large debt challenge. Last week, at a time, on Thursday, we were pricing the 10-year Treasury note at levels that were, apocalyptic.
Right.
So I would say at this point, we've pulled back. Several steps have been taken in the Eurozone, several announcements, several proposals that at least, convey to the markets that European officials are getting the size of the problem, getting the message that they have to, seriously begin to make, bigger steps, not smaller steps.
Right.
And, that's led to some. In terms of equity markets covering as shorts, in terms of some of the speculative longs in the Treasury markets, they've covered that.
Okay.
And I think at this point, people just want to get a little bit more information.
But what about this? Okay, then let's take one part of this story. What about this division arising between the finance ministers about how much of a haircut these private bondholders have to take? What does that tell you?
I mean, this is not going to be an easy formula to work out, because we're talking about an enormous amount of funding and support. But I think we have to just say to ourselves that the proposals are strong. There's tensions in Europe about whether the ECB is willing to grow the money supply to help meet these needs, or whether the German taxpayer is going to be on the hook for this.
Right.
So there are big, sizable challenges there, not dissimilar to the sizable challenges that we face in our mortgage, debt and our mortgage crisis here.
But it sounds like, John, and I'm just gauging a little bit also from your body language, that this is all that maybe the markets are pricing in too much optimism at this point. I know we've gone down so much, but I'm just saying, we've come up again on those yields.
Right. I mean, I would be a little bit in that camp. I'd be a little bit cautious here in terms of in terms of equity prices. In terms of bond prices, I think we've definitely sold off. We're in a clear range. The range is a lot lower in terms of prices than what people were thinking about even just a couple of months ago. So
right.
I think we're sort of at the lows in terms of the range in Treasury price. But I think overall you have to just say, well, Greece has voted on a property tax. That's a small step in the next direction.
Okay.
They hopefully will get their funding, their aid, to stave off default. So that's another little step. Europe is recognizing the scope of the problem. That's another big step. And in the U.S., we have to begin to start moving, away from things about little policy stimulus for unemployed and just getting the scope that about 25 million mortgages are unable to refinance in the current environment. And that refinancing, if we had a proposal, would actually save households about $55 billion to $65 billion a year.
Wow.
So,
okay.
we all have big challenges.
Okay, well then, John, let me ask you this then. What will keep this rally going in the equity markets? What will keep the selling going on in treasuries from here on out in the next few days?
I think, policymakers in the U.S. and in Europe just have to continue to just come out to the market and say, we're recognizing these matters. We're entertaining proposals and listening to proposals. The proposal has to be large enough in scope to give markets some confidence that even if, a fraction or a portion of these things are done, they will, help avert a recession next year and a global recession. And I think that's the key thing.
Okay, and John, before I let you go, we are going to get some hard data in about half an hour, the durable goods. What do you expect out of that?
Okay, we're a little bit above the street on the durable goods number. We think transportation is going to be leading the orders number overall. We look for commercial aircraft, motor vehicles, ships, and defense to be leading this category. So we're looking for a gain of about 0.4, streets at minus 0.2.
Okay.
When we move outside of this number, we think ex-transport orders are going to be kind of flattish.
John, thank you. Appreciate it. John Herrmann of State Street.
Thank you so much, Betty.